What's up, YouTube? Welcome back. So, again, Sunday, we're going to talk about the expected moves for the stock market. We're going to talk about what happened last Friday, because it was just one of the better examples. So, last Friday, you guys all know just the crazy meltdown we had, right? I don't know if Powell came out and said, hey, the market does suck after all. I didn't watch it, but I know there was something about... I'm not going to make the joke. Anyway, you guys know it's Jackson Hole. But look what happened last Friday. So look where we closed instantly, first of all. As soon as we got that report and it came out, it brought us south. This is why we talk about getting outside here. It brings on that volatility. So, I don't know. I even warned the chat in this because I even said, like, I kind of think the fireworks are done. They bring it back in and we hold it. Once we got outside this, because I was closing my positions, even this position, I closed it. I was joking. I was like, man, the 409s, like that's what I had some 409s that I had sold outside of the bot. The bot was down here. I thought, man, this is hilarious. No way SPY gets that. And I was this close to even just saying, I'm not even going to pay the commissions to close it. If you let it expire worthless, you don't have to pay the commissions. But do you hear how silly that sounds? It's exactly why I closed it, because I'm talking $1.50 in commissions, risking each spread's $2. It's $200. Would have been a $200 loss over $1.50. So I don't cry about commissions. I don't care. We just shut them down. But how crazy was that? Once we got outside, there was no reining it back in. This is delta hedging. This is what takes place. So after that, if you bought a put, let's say you're up here, you have an out-of-the-money put because you think out-of-the-money contracts are a good idea. This is the one time it shows up on Instagram. You get to tell everybody how cool you are and how you knew it was coming, Forgetting all the other times it never happened and you blew your money. You're out here, you're buying the 409. For me, it was literally a dollar. That spread was $1. So you could have spent $1 or $2 with commissions and made $200 by the end of the day. That was a wild move. But what happens is, this person bought an out-of-the-money contract. So when you buy a put, the market maker that sold that to you is now positive deltas because you're negative, they're positive. So now they have to short shares to be delta neutral. Except they don't care about that. Once we get outside, they don't care. Like why this takes place is because you bought the put out here. They're hedging for everything inside here. That's an automatic. It's taking place at the moment you buy that put contract. Out here, they're like, nah, we don't need to hedge for that. That's a silly, stupid play. We're going to be just fine. Once we get outside here, it's no longer stupid. Now they got to start hedging for it. So they got to short shares, which is now sell-side activity, which kind of puts you in this endless loop down because as it's going down, people are buying puts, so now they're hedging and technically shorting shares along with you. We're just running this thing into the dirt, which is why we talk about options control the order flow just from that aspect. So it was just a great example of when I tell you guys 80% chance we rein it back in, 20% chance we don't, but that 20% is big. It's extra volatility. Because I even told my chat that's what's going to happen this morning. But again, I was leaning on, so I don't want to say I was right. I was just leaning on we're probably done. We saw the whole meeting take place. It was nothing. A little bit of up, a little bit of down. Well, all the way down, all the way back up, and then to green. I was like, no way. I had some 421 calls that I was babysitting that I had sold. I was like, man, do I take the small L on those? Because they were down like $50 a pop. I was like, I'm going to babysit. And then it popped back down quite literally to where this was at. I was like, red. I was like, all right, let's hang tight. And then the dam ruptured. I was like, well, those are good. So we let those go. Yeah, so those were good. It was the puts that I had closed. When we were green in the morning, I closed my puts. It's like, man, just get rid of those. They're 409s. It's silly. I thought, no chance. We did. We went right for it. So the reason it just looks so smooth and such a trending day, I know everyone's got an excuse. It was for sure Powell. It was this or that. And you guys have all your speculations. I promise 100% you will never know the actual why. I can't even tell you you're wrong. You probably have a portion of it. Your opinion, you're probably not the only one with that opinion. And in the game of supply and demand, it's whoever's got the most of that opinion wins. But, you know, I think it was delta hedging. You think it was all Powell, solely Powell. Some people think it's the next leg down, so they're going short for that. Some bulls are just getting out. There's a lot of reasons to be selling in this, why it could go down. It's why it's important we just don't get lost in the why. It's like a conversation starter. That's really about it. But that's what I think happened, what took place. And that's why when we get outside these standard deviations, I do catch that knife a lot. Like, I was selling, like, I sold the 409s inside here. Because they were juiced up. People that bought puts thought this was going to happen these days, and it didn't. So I play the rein it back in play quite often. As far as these go, it gets joked around a lot that these are support and resistance, and you'll watch it just kind of play at these levels a lot. It's not. I don't actually care as far as the trade goes until we get outside. But that's the downside. We're either reining it back in or we're doing this. That's your 80-20. 80% chance we're reining it back in. 20% chance we're moving and grooving. So what a great example. I will try it out next week's. I know it's like a $10 move. I'm in the 385s. It was only $18 for next week, but I was not jacking around. We're going out there. So the previous weeks we were pricing it. If you've been watching all these videos, you guys know we're pricing $7, $8. I already know the expected moves. I'm going to pull them up and show you. But we're expecting like $10, almost $11 this week. So this is where people do get screwed because they think, oh, first of all, calling it a stock market expected move, that's just kind of what it is. We're expecting this much of a range. It's not really like an expected, we're going to hit that level. But they're pricing in volatility, so it's plenty of room for this to happen. They don't want to be hedging. Imagine somebody sitting at the desk, and they got to physically hedge for all these themselves. They don't want to be doing that. They want to price in their risk. Let's hedge here to here because we're going to be fine. And as a market maker, I'm going to take the week easy, and I'm going to get a head start to my weekend. They don't want to be doing this. So now, also it's derived from everybody buying options. I'm just trying to paint the picture for you. Everybody puts their bets on the board, right? Now the casino's saying, all right, we got enough to cover this for sure. Where was it going with that? I don't know. We're pricing in a bigger move this week, which usually encompasses all the volatility that you guys, and I say you guys because retail loves to get excited. Whether it's bulls or bears, there's one trending day, and man, it's all-time highs or zero. There's no in between with you guys. It's comical. That being said, getting outside the expected, I do like weeks like this because we broke through. It's like we went nuts, but we were only expecting an $8 move. Now, like, okay, these things are getting a little wiry. Let's go ahead and let's widen this out a little bit, which now effectively everything's under control. If that makes sense. Am I painting this image for you correctly? VIX got a little bit of a bump. So they bought up some volatility. Again, guys, I'm not zoning out the VIX. It's not a contract that I trade. It's like $12,000 per contract. So I know little kids aren't trading this. But I look at the VIX, one line. It's an on or an off switch. Your next candle at any moment in time is going to be green or red. I promise. If you're weird, you got like the doji candle that's gray on TOS, the graveyard one. I promise that next one's going to be red or green. It's going to make a color, red or green. When the VIX is up like that, I assume a bigger red or green candle. So it's all more about how I allocate and manage risk. Because everything I do is done at the buy. There's going to be a huge difference between me and you. If you ever ask me about what should I do with this play, and you notice I never have that conversation, because my what ifs are already answered before I ever click the buy button. What if it gaps $20 million overnight? I'd be retired or I'd owe somebody a lot of money. No, still not likely. I'm taking that risk on, I guess. But everything, is it going to gap? Is it going to trend up, trend down? All of that's priced in. How much am I really risking out here? So if your trades aren't mirroring that, you guys don't have any idea, then I would suggest, I have a playlist. It's free. I do have a course. It is the teachable link down below. I have a private chat. I go live every day. Come in there and talk to me all day. But the YouTube part, that's free. And if you can't even figure that out, then what's joining a group going to do? Except you're just going to go in there and complain about losses if you're not listening. All right, let's get back to it. Let's bring up, let's talk about the expected moves. So SPY 1084. QQQ 1058. IWM 617. And I don't know why. Usually Tesla's always been like an accent. It's always been up. I'm just looking at it. Let's talk about Tesla's new move. $16. We're from a $50 expected move 50.52 to 16.55. Man, this brings me back to when I was like first on YouTube. I remember sitting at I was sitting at Starbucks with someone else that was editing a video or something. So I'm buying Teslas, like 292 or something like that. And I said, you should do it. He's like, oh, no, I'm going to get in there eventually. I'm going to get in there, I promise, just that. Don't worry, I'm going to do it. Never did. Those shares went to 5,000 a piece. And it's that price again. Story hasn't changed. All right, let's talk. What was that? IWM was 617. Ooh, got a little outside. Got a little weird that day. Wait. No. IWM didn't even. So just outside 1. Didn't quite make it to the 2 spot. I was glued to SPY. Oh, I remember. Something I even told my group. I said, I'm done for the day because I'm taking a stupid trade. The premium was so jacked up on BBBY that I bought some shares and instantly sold some $13 strikes on them. This is silly. This premium's so jacked. But I bought it. It was like 10. I don't know my exact price. 10.50 something. And then I sold the 13 strike for $100 per contract. So I spent just under $1,100 to make $100. I don't chase premium like that, but I couldn't get over it. Hopefully BBY doesn't just tank. Hopefully it keeps hopefully Reddit keeps it alive for a couple more weeks. Ooh, what was last week? Last week on this was 888. Didn't quite make it there. This week's 1058. Even at best, we're pricing at a lower high. Ooh, gonna be a red week. What do you guys think? Red week this week? Red week, sideways week? As far as I get to make my decision in the morning. I did not swing crap. Nothing moving the needle. Nothing. Yeah, I got my normal Teslas. I got the BBBY position, the options that I sold on SPY. Personally, I sold some. Ooh, shoot, that was loud. Sold some 401 puts. Not enough to screw myself up though. If we do just continue off into the abyss. 1084. You get so excited with the mouse like we're going to put it somewhere, and then, no. Ooh, are we going to bounce off that 625 EMA? What do you know about that? All right, the bot, this is only $18. Again, so like, yeah, I'm $20 outside this. I know I'm at the 385s. So, yeah, I'm down here. Yeah, and 425s. 385, 425 is what I'm in. So, if you take that trade as of right now, you make $18 to risk, at this point, 180. So, anyway, I will wrap it up here. Let me know in the comments down below. You guys ready for a red week? Are we going to consolidate this week, send this thing down? As far as it goes, we're going to talk about this on the Don Franz Show. That is a lower high. If you want to know what we're going to talk about. I will go live 1 hour after futures open. If you watched the previous stream, I told you guys I was looking for this blue box. One of these to be a lower high, and then don't buy that zone. Send it back down. If you're curious how I trade, just watch last week's stream. I go live on Sunday, Tuesday, and another, again, video on Thursday. Watch Thursday's video. Thursday's exact video is when I say, looking for a lower high. And we got to see if we hold this zone, which you guys got that answer pretty quick. short behind that. Getting below this zone, the reason that's bright yellow is because that's when I'm for sure bearish. So I did take some short plays, short the futures, but getting below this, I gotta say I'm on the bear train until proven otherwise. If tomorrow's just miraculous green pops up here, maybe that changes my mind later. But in the meantime, I don't like fighting the trend, so we're going to stick with this one for now. So I'll wrap it up here. I'll see you guys. Hopefully you're subscribed. This is Don Fraud Trading. Subscribe to Don Fraud Show because it's where I'm live. It's where I like to read your comments and comment back. So hopefully I will see you guys there. Have a good one.